Morning, everyone. Welcome to the room. Hope everyone had a good weekend. As you know, trading futures involves risk and is not suitable for all investors. The information in today's presentation is for educational purposes, not a trade signal service, not intended to be financial advice. A lot has transpired over the last week. If we look at the daily chart, we talked a little bit about this in the video last night. We're sort of converging on this 2700 area, which makes sense, round numbers, 2600, 2700, 2800, just sort of act as natural magnets of where the market wants to move to. You'll see stocks like Google, Amazon, as they were approaching that $1,000 mark. The market kind of moved quickly to that point. And that's kind of what we're getting here. If we go out, let's go out to a weekly chart. We can see this big run up clearly. And now we're getting this consolidation really anchored by these two down weeks. The correction that we had really took place over the course of just 2 weeks. And now we've just sort of bounced. We've traded at the next 50% retracement long. And we have also moved up and traded at the next retracement short. If I were to draw the full retracement short from highs down to lows, you'll notice that we broke that one. So we broke the short and we've traded at the long. That has held. And now we're at this next short. If I go to, say, a 30-minute chart, we can see it a little bit clearer just over the course of a couple of days, highs to lows. And I don't really expect this to hold too strongly. I wouldn't be surprised if we break this 61.8 of this short, get a bounce, maybe not come out and take this, maybe not take the swing high out, but just bounce and then roll back over, retest the 2660. I wouldn't even be surprised if we come down here, break this swing low, and put in another, big hammer day on the day that we break the swing low. So one of the things that I talk about from time to time is about how I manage longer term positions. And on a day like this, where we have a prior day is a big down day, and then the next day, this hammer formation takes out that swing low, or takes out the prior day's low, and it feels, there's all this terrible media coverage. Oh, the Dow's down 1,000 points, and everyone's having a field day. That's the day that I would, be adding to a longer term position. You constantly banking up money in your account just through a weekly contribution, and then a couple $1,000s after a month or two, depending on how much you're contributing, and maybe you go 6, 7, 8 months without adding, and then market pulls back on a day like that. That's when I would be looking to add. So enough on the longer time for now. We've got an opening breath here, pretty strong, 4-1. And on the right, the advanced decline line, 1,300. NYSE tick opening above 1,000. Now that's, we'll typically see the NYSE tick settle out here in the next 15, 20 minutes when we do open up like that. Not really what I would call a major gap up or anything super big to write home about. In the overnight, we've got a pullback. We had a couple of things here. Yesterday afternoon, tracement low to high, pulled back right at the close. then that has taken us up to kind of the overnight high, that negative 23% target of this 50% has traded. And so then all I did was draw from this 50% entry up to highs. And that gave us the next pullback. In the meantime, we also broke what I call the opposing short. So we have this long setup. The next thing I do is always draw the opposing, watch for that to break, and then we have a small setup off of the larger setup. And I know you guys have seen this, if you looked at the markets for more than a couple of days, you see this a lot where you have a larger setup and then smaller setups after that. And now that we've traded, once we go from 50% to the negative 23, then I'll draw the next full retracement from that entry up to highs. So that's what we have. We had the long. I drew up the opposing, meaning the opposite setup. The long had traded first. Now I want to see, okay, do we come up to the opposite setup and just fail? Or do we get sellers that jump on board and then that holds? And that's sort of what we had right here. Another good example on the daily chart. The main setup is the long. That traded first. But I want to draw the opposing from highs to lows and see, is there participation? And yesterday there was. We stopped at that 50%, sort of traded sideways a little bit, and then now we're breaking out of it. So what does this mean for the morning? Pretty good overnight trend. There's definitely momentum in the upward direction. Now, in the last couple of hours, pre-market and early in the morning, trading a little bit more sideways, but there is movement, which is good. In the last couple of days, really the last week, we've seen this scenario where the first hour or so is sideways, range bound, and here yesterday I just have noted the first 30-minute high and low. So we traded range bound for the first hour or so, and then we develop a trend, and that's what we've been seeing for the last week or so, and then you have this nice trend after that. So no need to get overly aggressive right at the open, because I'm finding that getting some good trading opportunities a little bit later in the day, which is a little bit unusual, but when you go into these bigger trend changes where we were in the strong uptrend, now we're in this little bit triangle formation, that kind of stuff can happen. So we will keep our eye on, keep that in mind as we move forward this morning. If we take a look before we look at market profile, so you can see these little, so here we have another good example. So the bigger long setup, and then I want to draw up the opposing. We can see that break. When I say a break, we mean we can see the 61.8 pierced or traded through. And if this was not right at the open, I just draw from lows to highs and look for a potential long setup in this direction of the larger setup. But in this case, morning pre-market, a little bit more dangerous conditions to trade, right at the open. You get a little bit more reactionary trade. So that's why I wait those first 15 minutes. But in the meantime, we can just kind of take note that, okay, we've got retracements that are bouncing, trading at the 50, selling off, drawing from the next 50 down to lows. We trade at the 50 and we sell off. And it's important to, continue to draw the setups throughout the day, both, in the first 15 minutes, the pre-market, because, every time you draw a setup and you see it touch like this and trade down to the negative 23, it kind of helps visually give you good practice, but it also helps give confidence in, if you can see a setup work over and over again, it's going to give you more confidence to take the trade at the 50% when the next setup presents itself. Now, you don't want to forget about, let's say this is the first short, trades at the 50, moves down to lows, retests, and then moves down to negative 23. Here's the second, trades at the 50, moves down to the negative 23. Here's a tiny one, the third. You want to also, it's easy to be able to find ones that, it's obvious when they stop at the 50. It's not quite as obvious if you're not drawing them in real time to find the ones that fail, which is why even if you're just trading on a sim account or not even trading at all, just have your charts up, to be doing it in real time so you can, see them materialize. And then, coming down here, you could say, okay, well, this one traded into the 61.8. Well, let's see how far it went. We've got a 25.50, and it traded into a 27. And so what do we have here? Well, we're having a situation where we've got this little short that's sitting right on top of a bigger long. So I wouldn't want to be fighting the larger long setup that's already showed participation once and gotten a bounce. We've came down to the long, got another bounce. Now we're sitting, kind of moving sideways at this long. And so that's where the context of, what's happening one time frame up. And you don't necessarily have to pull up a 15-minute or an hourly chart, but just be aware of the major swing lows and swing highs for the last couple of hours. It's totally viable to ignore everything else that's going on and just have a 512 tick chart up, and that's it. No indices, no nicey tick. You could totally trade right off of the 512 tick, and that's it. But you still want to be conscious. You don't want to be so zoomed in that you're taking, the setups on the 512 without being aware of, what's happening just to the left in the past hour or so, or 2 hours even, where we see this consolidation back here lining up with this consolidation over here. So as a way to filter, okay, it is very difficult to take every single setup. Now, if you wanted to zoom in really far and say, okay, I'm going to wait for a break, and then I'm going to start to take every setup in the new trend. So here we get a break of the short. Okay, here we go, taking the first short, trades down to the target, and then move over, and then take the next short up to low, trades at the 50 down to the target, and be constantly getting in at the 50 and out at the negative 23, because it's easy to miss trades. It's easy to get caught up getting in and getting out, or maybe a trade doesn't come all the way back to the 50, and so it doesn't give you an entry. So one of the things I talk about quite a bit is if you can get in at a 50 and trail your stop, that limits the amount of time you have to limit the number of times you have to actually put on a brand new position, open up brand new risk, and risk even the market not coming all the way back if it does strengthen and not fill you. If we take a quick look at the market profile, we have prices currently about 27.21s, 27.13s is the last couple of days of point of control. So we're coming back down into this range, which you can see trade back here. Going to turn off trading hours only now. You can see this consolidation or this range back here on the last week, 2 weeks ago. The short is holding. We've kind of gone into a nice little series of shorts here. Here's that low to high from yesterday afternoon, sort of just kind of coming back down, maybe retesting the 27.18. Starting the day, a little bit of a gap up and then filling this gap in just a few points. It's important to note where the close of the prior day is. I like to, that can also add act as a magnet. The breadth has come down a lot, 4.3, now we're at 1 to 1. I'm going to draw the full retracement trading hours only here. Since we've made all these little moves, nice structure this morning. Nice little shorts here. I'll draw up the most recent short. This is like the fifth one, third, 1, 2, 3, fourth one. A 22. See if that takes us down to an 18. Takes us back down to retest the larger long that already traded at its negative 23, but nonetheless kind of back. 27.18s is the larger short above us too, so. But market profile wise, 27.13 would be an area that could see the market moving to. That's the point of control. We're already within yesterday's value area. We're down about right here. And not only is it yesterday's value area, but 2 days ago also in that value area. So a lot of traders seeing this area as an agreed upon price, agreeing that, okay, this is where we're hanging out. We've hung out here for a couple of days. Same setup on the NQ, except the NQ has pulled back and held. It's so much stronger. You notice the NQ has made a nice pullback yesterday afternoon, traded to the overnight, or traded to its negative 23 this morning, then pulled back to the next setup. So first thing I'm going to do is draw the opposing, see if this can break, and maybe we'll be able to get a long off of this. And I'll draw the full short. I didn't call this last one out as an actionable short just because, we've been 1, 2, 3, 4 legs lower here. So you're kind of what we were talking about earlier, taking a short as it is coming down right at the long. And then the YM, just to get an idea of the top 3 here. YM retesting just like the ES, probably the weakest. Yesterday afternoon, tested the 50, traded to the negative 23, and just retesting its 50. So the NQ, once again, is the strongest here, already breaking out of its opposing. So the NQ would be a go for a long if we do get a pullback. Definitely a strong uptrend here in the NQ. ES a little bit weaker, but still showing good trending. I don't get too crazy, drawing other shorts on the way up. What I'll do is draw the most recent one, the most recent high to low as a reference point. If that fails, I'll draw the full halfway back. If we get some sort of random reversal that sells off and breaks a swing low, I will go then after the fact and find, okay, well, maybe, some bigger computerized trading program was using a different anchor point. So maybe they end up using this one here, but you won't know that until we trade, break a swing low and trade down to the negative 23. And then you can use that as your starting point and then take the next high to low. And did I miss the low tick of day of 46? 46, yes, we do have a low tick at lows. So 27, 2250s is in play. And notice how this long takes us up and lines up right with the full halfway back short. And that's something that happens quite a bit where you have a long setup that takes you up into a short setup. So 27, 22, 50 or 75s, round up and add a tick. NQ close to breaking its highs. Zebra and and ZBRA had a nice little bullish engulfing pattern. Swing trading long there took, and then SCCO broke the high of the low bar in this little pullback. So far gaining some traction, working out nicely. So our little long here, trading up into the short, negative 23% target, first target at 26s. Let's see, go one more tick. Trade through it. So I'm not closing out the entire position just because we're at the short, but taking half off, or if you've got two contracts, one off at the negative 23, it's convenient when it lines up with the short. So there's our negative 23 target hit. And so what ends up happening is if the market does get participation at this trading hours only, halfway back short, then we'll either start to come down and then retest the 50 and then break the swing low, and that'll get us out of the long, or we'll just trade through and then we're already in the long and riding it through the failure. One approach that I have talked about in the past is, but I haven't talked about in a while, is trailing the 61.8 of the next setup. If you really don't have, if you have a situation where you've just got one little candle pulling back, and you don't want to just you don't want to leave your stop below the major swing low, but you don't want to trail each candle's low. If you want to draw up the next retracement and put your stop below the 61.8, that's a viable option as well. But the idea is just to have some strategic plan of not just what you're going to do. It's easy to place a stop and have the market blow through and stop you out and be out of the trade, but what are you going to do if the market goes in your favor? What's your plan of action if the market does start to run, rather than just close out the trade for a point and say, well, gosh darn it, I should have stayed in longer. Having a plan for what to do as the market runs in your favor via a trail stop is very, very handy. So you can put your stop below the one candle pullback at 2350s, or you could put it below the 61.8, just call it 24s. And then if we do trade at the 50 and bounce, then you're still in the long. If we come down and get stopped out, then you can just draw up the first short off of the bigger short. So you always end up with, a lot of times, you end up with a bigger short and then a small short that follows that, or a bigger long and then a smaller long that follows that. And it can be helpful to remind yourself that nobody knows for certain which setups are going to hold or which direction the market's going to go. It might look like we're trading at we traded at 50% and it looks like, yep, this is going to be a phenomenal short setup, and it blows through. Or it looks like, wow, this is really dirty. The market traded one tick away from my stop. It's retesting the 50% 3-4 times, and maybe I should just get out. And then it ends up going, your way and just completely kind of surprising people. But you just have to follow the same, systematic approach as best you can. So now here that we have a double top, you can move your stop up underneath the swing low. If you want to get a little aggressive with your stop, we are at the short. Let's say you have 3 contracts, you could put one underneath the swing low and leave one below the 61.8 if you want to give it a little bit of wiggle room. I'll do that sometimes. But now here that we're breaking, now that's kind of the signal that the short becomes in play. And as long as we don't stop right at the full retracement, see, now I drew the opposing. It's nice if we can come down and break the 61.8. Otherwise, we're just, if we stop right at the full 50 long, now you have a short in play and a long in play, and both are showing participation. If we come down, break a few more ticks, then it's a really great setup to have this double top with the swing low, and then you can come down and draw a really strong and valid short. So just by using a couple techniques like this to draw the opposing setup, it can help you, between identifying the swing lows and swing highs and waiting for those to break and drawing the opposing setup. It can be a helpful way to filter some of the trades. So even though we only got a move from, call it 23s up to 26s, you're in a trade with the ability for it to go further. You've reached your first target, you've taken out the risk on the trade, and you're already in a trade and you've got a little bit of momentum. And so when a trade, quote unquote, fails after it reaches its negative 23% target, that's okay. not every trade is going to continue in a very strong series, but the idea is, with trading in general, you want to be able to place trades that have calculated risk so you can be in the game. So here's our break of the 61.8. We'll see if we can come back up and trade at this 50. It's at 24.50s right now. And if we can, and we get a reaction, then I will use the target of this larger short, 27.17s. So see how you can use the smaller 512 as your entry, and then use the larger as the target. But so far I haven't gotten a pullback yet. We'll see if we do. Market profile wise, you can see the first 30 minutes noted here as the letter A, and we opened up, where did we open? 31.50s right here. Opened at 31.50, traded down into yesterday's value area. Didn't make it all the way to the point of control yet, but I wouldn't be surprised if we gravitate towards 27.1350s. Definitely a strong possibility. Now what we're setting up in looks a lot like yesterday. We kind of traded close to lows. 27, 28.50s is a valid short, but it wouldn't surprise me too much if we stayed range bound for the first hour, like I talked about at the open. So it's nice when we come down and break the opposing just by a tick or two and then retrace, as opposed to this low is awfully close to the low over here. And you got to ask yourself, well, why couldn't the bears push through lows? Obviously, bulls stepped in down here at lows, saw this as a buying opportunity, and pushed it higher. Now we are at the short on the larger time frame, so that gives, we've traded at the larger time frame short. We've traded at this next short on the 15-minute, and then the smaller 512. I'm also seeing a little bit of a channel developing, an up channel, and we're kind of at the bottom of that, like so. But it doesn't mean that we can't break the channel, break this little swing low from yesterday afternoon. That's when we would really see a nice sell-off right down to 26.60s. So we'll see if there's anything at the 23.50s. Wouldn't be surprised if we came and retested the short. That's what has been happening the last week and a half or so. First hour being range bound. So I'll also go ahead and mark the high and the low. But so you take a small long setup, or any small setup, and you get a first target hit, trades at the negative 23% target, and takes you out of the second half of the position, and then gives you a little bit of wiggle room to take a stab at the next trade, and you if you're getting a little bit of momentum, 30 or 40% of the days out of a month are going to be, a couple of points here, a couple of points there, losing trade here, scratch trade there. But one of those could end up being 3 or 4 points. And so rather than just sit on the sidelines all day on a choppy day, if you're seeing some trending within the range, seeing some signs like here, we have participation. We've already traded the 23.50 that I just talked about, and we're already down to the 22s. Now we could easily come back up, retest it, and break, but I'm seeing participation at the 50%, so I'm going to continue to take stabs at it. And one of them will eventually be the one that breaks and runs. So once we break a swing low here, now I'll take my stop and move it one tick above this little swing high. So a 27.25s. So 23.50s. I guess it got me in at a 75, not a 50. That's weird. I guess that kind of worked out. But huh. So yeah, stop at 27.25s. Which don't have to do anything really to move it. When it's trades one tick away from your stop, then your stop doesn't move. But first target 19.25 didn't trade. It touched it, but it didn't fill me. Broke lows by one tick. Did not get a low ticket lows, which is good sign that we could continue lower here. If we come down now and break this, if we make a new low on the day, now I'll take my stop. There we go. And move it one tick above this little swing high. Again, you could also draw up the next short and use the 61.8 to be a little bit more conservative. But got that first target hit on the negative 23. And then let's use the larger target down here as kind of that magnet, 27.17s. See if we can come down, work our way towards that point of control from yesterday, 27.1350s. And but that's why it's helpful, rather than just taking an arbitrary point or two, use the negative 23, take your in this case, what was it, a 23.50. For some reason it filled me at 23.75s. But nonetheless, down to a 19.25s. So take your 3.5, 4 points on the first contract. So even if you're just trading two contracts, taking one off at the target and then trailing now the swings. So stop down here. So if you get stopped out on the second one, you're still stopped out with profit. But the key here is to let the market bounce, roll over, and then when it breaks the swing low, that's when I'll move my stop down. If we just come straight back up here and take out the swing high, then out of the trade. Again, like I said, you can use the 61.8 as your line in the sand, which makes a lot of sense, and just add a tick or two and use your stop up there. So if you have three contracts, it's okay to use different trail stop methods for the different contracts. If you've got three, you could take one off at the start with -6 on all three. When you hit the negative 23% target, take one off, maybe trail swings with the second, and then trail the 61.8 with the third. And if it really gets running quickly, you could get real aggressive and start trailing each candle with one of them, and then have a third to be a little more conservative with. So there's definitely a lot you can do as you start to increase contract size, but it doesn't do you any good to increase contract size if you don't have a grasp of the execution part of it and getting in, especially when things get moving quickly. Your dome's moving fast and you're have to get quick on the trigger. this is a really good example of a trade that, you might think, oh shoot, you see it get filled and it goes quickly. You start taking some heat. It comes up one tick away from your stop and you say, well, this trade's not working out. When it comes back to break even, I'm just going to close out. And so what do a lot of traders do? It comes down to break even, they close out, and then there it goes, and you get your run. So you gotta be able to accept your full stop out from the start and say, okay, I'm comfortable risking, I'm comfortable losing all 6 ticks, and that's your risk. And if that makes you uncomfortable, then you're either trading too large contract size, or you don't have enough confidence yet, so you should go back to a sim account. I never really use market orders, Abhi. All of these orders here are limit orders, which is why I was a little bit surprised that it filled me up a tick. Maybe I had my order at 75 instead of 50s, but I'm always using a limit order to a sell limit here, and then a buy the stop is it's essentially it becomes a market order when price crosses your level, but the entry is a sell limit, so it won't fill you until price gets up and crosses that level. So here's coming one tick away from my stop here on the swing high. Nothing down at lows really signaling major reversal. We still have room. I guess we traded close. Oh, 1725. So yeah, a couple ticks away. There's the break of the swing high, and closing in on a break of the 61/8 as well. I'll get rid of this first one. I guess you could call that filled. We were 1 or 2 ticks away from the round up from the -23. So we can draw the next larger short. Sometimes when there's only 2 retracements like this on the way down, when you draw up the full halfway back, the 61/8 and the 50 are kind of close, if that makes sense. This is the first move after the bigger short, the second move after the bigger short, and now when this second one breaks, we're at the next 50% to target larger entry. And if some of this or all of this, for those that are tuning in for the first time or are fairly new to Fibonacci retracements, or just looking at the market in this way, in this pattern of retracements, if this seems like a whole lot of information to grasp, it definitely is at first. But the more you watch the markets, and that's why I encourage people to start on a sim account. There's no need to trade live money when you're trying something new or trying to learn or trying to master a method. So, but yeah, to your point, Abhi, I don't use market orders. Like if I see a trade setting up, and I won't just go hit sell market or buy market, or the market came up close to the 50 but didn't get all the way there and started selling off. I wouldn't just drag it in or hit sell market. I always wait and try to be as patient as I can, because if you start reactionary trading, then your emotions are getting more involved, and that's not a good road to go down. You want to, just like I was talking about with the market coming one tick away from your stop, it's important to be able to acknowledge the emotions that you're feeling, or acknowledge the desire that you have. Ooh, the market is coming back. I'm taking heat. I really want to just get out at break even. Acknowledge that thought, but then don't act on it. You've got your stop in there, so if the market does blow through, you're going to be protected and taken out. So kind of before you even place the trade, pretend that, ding, you're in, ding, you're out. Wow, that you got stopped out in 2 seconds. Kind of picture that happening, and then that can help calm your nerves after you get in the trade. And if you are feeling nervous and sweating and those kind of fears, then you should definitely be back on a sim account. And I know that can happen with just one contract if you're when you first start, but the more practice you have, not necessarily practice clicking the dome, but just practice viewing the charts, drawing up the setups in one direction, and then, okay, here's a 61.8 break. Now we start drawing them in the opposite direction, coming down. Okay, here's a 61.8 break. Then you draw them in the other direction and just keep following the trend like that in a systematic way. It's going to become much easier to identify, wow, today there's a lot of good trending. There's not a ton of momentum, a little 3-pointer here, a little 4.5 pointer over here, but it's a lot different than yesterday morning, where we had a break of the trading hours only long, then a break of the trading hours only short, then a break of the trading hours only long, and it just, break after break, which is much more range bound. No break of the first 30-minute range for quite a while. Whereas today, you can see how we've developed more of a channel as opposed to a range. Come on, channel. Like this. We're in more of a channel, and thus getting a little bit more trending action. So now we've come up and broke the next short by a tick. Again, no 801, no low ticket lows. Draw from low to high here and see if there's any reaction. You can take this as a blind limit if you want. Let's see, what is the distance between the 50 and the 61? We've got a 2075 down to a 1975. So that's good. You can use a 21, and then a 1950 would end up being your stop. So your stop is outside the 61.8, totally a valid long then, taking the blind limit, so to speak, at 27.21s, because we've broken the 61.8, we've broken the swing high, and we're kind of coming down towards lows. Now keep in mind, we've got this short that we're just sort of moving sideways at. Eventually, we're either going to break out of it, 61.8, or break down here at 27.18s. But you kind of have to just trade what the market gives you and trade what you see as opposed to trade what you think should or will happen. And that can also be a hard concept to grasp. But, we're getting traction this morning, getting, like I said, 3 points here, 4 points there, kind of sometimes these days just stack trade after trade and, a scratch here, a scratch there, 3 points here, 3 points there. That's just how it works. Once again, participation filled. So you can see why I round up Nah, tick. So if you're on sim, that's, I remember the very first day I traded a sim account years and years ago when I started day trading or experimenting with day trading. I was getting filled as the market touched my price, and I thought, oh, I hit a gold mine. And then as soon as I moved to live, I realized, oh, market has to trade through your price to fill it. So that's why I round up, and then if it's an odd number like this, and add a tick. So now I'll just take my stop from that -6, move it up underneath the swing low here, the low right at the entry, so at 20.50. So that at least reduces my risk on the trade. So even if the market doesn't pull back and get another higher low, so there's the first target, 25s, just the same thing as I do as my entry, except I'm rounding down and subtracting a tick. So actually at 25s, I had my order one up. Oh no, that was right. It's a 58. It looked like a 50 even. So now you can leave your stop alone. You can, if you want to trail the 61.8, you could put it at the 22.50s. I have seen the market, come down and break the 61.8 and then move higher from there. Let's draw up the full retracement on the day. I have a feeling we're getting close or stopped at it already. Full high to low. Yep. Sitting right at it. So we've got, a very quick 21 to 25. A quick 4 points. If you've got two contracts, you take 4 points on the first contract, you've got your stop tightened. So even if you come down and take a -2 on the second contract, you're up 3.5 points. That's pretty good with two contracts. If you want to get a little bit to lock in a little more, you can move your stop on that second one up to a 22.50s. But same process, same methodical approach. Now today's given us a good amount of setups. You don't like yesterday morning. I took one trade in the morning off of a high tick of the day, and then didn't do anything else for the next hour, and waited till we moved out of the range. And then we got into the trending environment, and then I had another trade when we broke out, and kind of rode that one out for a little while, and that was it. 2 trades. Now coming up and breaking the 61.8. So already long, which gives us a little bit of a advantage over traders who are not in a trade and might be looking at this trade saying, ooh, I missed this nice long down here. Let me draw up the next long and take this. Well, if the market doesn't come all the way back down, or if it comes down, touches your order, and doesn't fill you, well, hey, we're already in, and we can ride it out. And if the market comes down and stops us out, either below the 61.8 or comes all the way back down, well, you've already locked in profit on half the position or one of the two contracts. And so it's pretty much a win-win by just methodically going through taking the setups. Now here's, again, a 1 tick pullback. I guess you have that over here too. 1 tick pullback. That'd be pretty aggressive, but you could bring your stop all the way up to a 25s. Now I'm comfortable risking, the extra 2 points to see if the market moves higher here. But it's a valid stop placement at I guess it's 24.50s. So you got a couple options. 24.50, you've got a 22.75, and at this point, market being 4 points away from this swing low down here, you can use that. That's where the subjectivity judgment comes in. Okay, do you want to risk 4 points to see it move another 4 points, or are you willing to risk 2 points, keeping your stop below the 61.8 here to risk 4 points? or just to potentially see the market move higher. So always calculated thought process, calculated risks that I'm thinking about. So if we were to break highs here, then I would just either a 24.75s or a 50s, somewhere right around here. It'd be okay to move your stop up. I would be surprised if we make a quick move back to the high of the day. So that's a 27 up to 27.33s. Another 4 or 5 points is basically what I would be projecting. If I go up in the market profile, we have a 27.39s is value area low from a few days ago. Not much else around. So that's a good sign. A little activity, a 34 to a 37. So all signs kind of, showing up here at the high of the morning. There's our break. So that's going to be what I'm shooting for, but not really doing anything but trailing my stop. But it just kind of gives me some headroom. So if you want to move your stop up now to like a 24.50s, that would be a valid level. If you want to keep trailing the 61.8, you can do that too. But see, if you get anxious on Monday morning and just get chopped up, then you miss. You're frustrated the next day. Maybe you dug yourself a big hole Monday morning, and now you're kind of off your game, if you will, and then you miss these mornings where we're not getting 10-point moves, but we're already up 6 points. I mean, that's what more can you ask for, I guess. The market's giving us opportunities, and you just have to be able to be clear-headed and have enough detachment from the emotions and having to be right to be able to take those calculated risks. So I'm just going to leave my stop here at 24.50s. Call that good for now. The more you watch and follow along, both in the room and throughout the week, the easier it is to identify, okay, this morning is looking really good, or oh, this morning is looking really choppy. I want to stay away, or I want to take some trades. So that's really helpful. But if you're just taking live trades and chasing things and creating bad habits, you're going to miss developing yourself as a trader, developing those good habits. I'm liking that we're at the bottom of the channel. We formed this hammer. We could easily move to the top of the channel, the 61.8, 27.35s, which kind of lines up with the high of the day, value area low from a few days ago. But still keep the stop in place in case we do fail and turn around, or news comes out or something wild happens, as we know can easily happen. Now I would draw the low to high full retracement if we break and take an out here. Got our first 30-minute high and low marked. So far holding the stop. Wouldn't be surprised though if we come down to this 27.23 area, 23.25. So a nice little long 21s up to a 24.50s on that second contract, or second half. First taking it all the way up to 20, yeah, about the same. It's a 25. So now notice the distance here at 27.23 and a quarter. That would put a 6-tick stop at 21.75. So this distance between the 50 and the 61 is a little bit big. Now it could also maybe not come all the way back. We traded up to the negative 61.8, getting a bounce at not really the next traditional, but getting a bounce at the next larger moves. It's stretched a little bit. But if you identify, come on, toss. Here we go. If you identify a level like this and you draw up the opposing and it breaks the 61.8 as we just did here by a fraction of a tick, it's okay to take a stab on the 512, drawing up the next long, so a 27.26. And you can use that as your entry. Use the 61.8 use the target, the negative 23 of this larger setup, and see if you can get in that way. Something like that. And that's the setup I used yesterday later in the morning. it's helpful to have a prescribed loss limits on the day, on the week. A lot of you have heard me talk about giving yourself 2 full stop outs, meaning 2, full -6s as your limit for the day. So if your first trade, you have the opportunity to tighten your stop to -1 or 2 because that's under the swing low, and then you get stopped out. That's not a full stop out because the market was giving you some follow through. But if you have 2 full stop outs, you need to stop. That's the market saying, okay, not conducive to your setups today, not seeing something clearly. After a good run, say you have a couple big trades, or you have 3, 4, 5 trades that are all kind of working out, and then let's say you have a full stop out. You could use 1 full stop out after a nice string of winners as a way to protect your profits on the day, so that you don't start digging yourself a hole and eating away the profits that you've made, or end the day with 2, 3 losers after you had 2 or 3 winners and feel crappy going into the next day. It's all about keeping that momentum. If you think about any sports athlete or someone who's kind of a rising star, they have a good film, maybe they have another good film, maybe they have a couple of good games that early in the season where they start to get noticed, and then they really start to stand out at some bigger games, and then they get picked up by a pro team, going from college to the pro level. That kind of traction building is hard to regain once you've either had some sort of controversy or an injury or something that takes you out of the spotlight. And trading can be the same way. If you get in a rhythm and you have a groove going, and then all of a sudden, oops, I made a mistake, or oops, I had a losing trade. It's not really a mistake, but it becomes a mistake if you dwell on it and then start to try and make that back, and then you really do cause yourself to make mistakes. So on a good day, you could take your bullets down to 1 and say, okay, after I'll just keep trading until I have 1 stop out, or I'll just keep trading until my hour and a half is up, and then I'll stop. And so then you start to bank some profits on the week. Like yesterday, I had 1 loser and 1 winner, net positive on the day, and I didn't have to use any bullets, so to speak. Today, we've had 3 winners, not huge, but at least traction, and no bullets needing to be used, and then you kind of continue on your week and continue that momentum, and that's super important in trading. tomorrow, what do we have? International trade, Thursday, jobless claims, Friday, employment. As far as I know, Jerome Powell's not speaking this week. It's a little surprise last week. I think it was Tuesday. Jerome Powell was speaking, and normally the Fed chairs don't do a lot of speaking outside of the meeting announcement, the FOMC meeting announcement, and in very structured situations where they're going to talk about and forecast the future, what they might do. So I was a little surprised when the markets were started moving, and he was speaking, and kind of not the typical context of kind of sharing his thoughts and forecasts for what the Fed's going to do. It, outside of the typical FOMC meeting announcement. So those kind of situations definitely add some more volatility and fear. So a little while ago, I talked about how the distance between this 50 and 60-18 is larger than 6 ticks, and when that happens, I don't place a blind limit. Wait for it to touch and then see if there's a opportunity off of that level. I really wish there was a way to do a Control X or some sort of clear drawings on toss. So if you find a shortcut for that, let me know. I'll leave the channel drawn up. See if we get down to the bottom. Low tick, but not in a low price. Again, definitely feeling the resistance at the short. Every time we get to the top of the channel, we're just coming back down. Bearish candle, bulls pushing the market up, now giving it all back on this next candle. It's a little ways away yet, but I am considering going to the Chicago Traders Expo. I don't know if they've done an event in Chicago. I've done New York, I've done Vegas a bunch. They've done one in Florida and a couple other locations, but I am considering going to Chicago for that. I believe it's end of July. So I'll keep everyone posted if I do put together a presentation for that event, or I may just go and use it as an opportunity to catch up with folks, and it's always fun to get together in person. So much of trading is quiet and by yourself, which is okay a lot of the time, but it's nice to be able to chat with other traders. I'm sure most of you are in the same boat where you don't have dozens and dozens of friends that are trading or in startups, entrepreneurship, real estate, investing, that sort of thing, and think in the ways that we do. So the more you can surround yourself with people that think strategically and just kind of look at the world a little bit differently, the faster you can grow, and interesting conversations you can have, and all that fun stuff. So now we have a trading hours only short that broke, and a trading hours only long that broke. So I would be cautious. I would definitely wait for this next. If we bounce, I would wait for the short to trade. And if we do get a reaction and come down and break the opposing, that's only when I would look to jump in. But in the meantime, be cautious that the middle of this range is going to be very dangerous, this area. Right in here. Come on. Like so. This area is going to be dangerous as the market just trades through it from the bottom of the range to the top of the range. So trading in a range bound situation is okay. You just want to be aware of where the top and bottom is and try to be active there or off of the, the first long setup off of the bottom of the range, like so, or first short setup off of the top of the range now that we've established this channel. I'm going to move my drawing down to the first hour's low. Just mark that. Bearish engulfing candle. Low tick at lows. Which makes the long valid. And again, if it just blows through, then maybe that's your opportunity to call it quits for the day. Not getting a pullback yet, though. So I continue to draw up the profile throughout the morning, and you start to see, okay, here's where most of the trade has started to cluster. We have stayed within the first hour's range up until this little leg lower, so a 1775s. Point of control from yesterday is just below us, did not make it there, but you can see yesterday's trade, a bulk of it is overlapping with 3 days ago, and that's where we've been overlapping here. So these days where you have bigger columns of trade the market's going to gravitate back towards that area, like back in here. Lots of overlapping value, and that's right where we're at right now. Overlapping value area. So nothing doing on the little long. I think that'll do it for me this morning, at least as we wrap up the room. If we can get trending, yeah, breaking down, maybe a short take us down to the 2660 like I was just talking about. Short setup here is at a 1575, 1550, bottom of the range. Another not quite low tick, but so pretty good day. Some momentum, a little bit of momentum, and the trades that didn't get a ton of follow through still got us 3 or 4 points. Short is getting a reaction, 1750s. This break, this short being at the 2718s, maybe it goes somewhere, maybe it doesn't, but don't know if you don't try. So, yeah, lots of good stuff happening in the markets from a day trading perspective. Lots of good trades today, good examples to pull from. Like I said, you don't absolutely need an icy tick and the breadth and all the indices and things of that nature, but understanding the market structure and following along with the setups, even if you're on a sim account, especially if you're just starting, take advantage of that, being able to trade on a practice account so you get a hang of things. And it's okay to go a week on live and then, try some things with one contract, and then you go back to a sim account if you need to. Totally fine. So I think we'll wrap it up here. If we get breaking down, there's a good possibility that we could move down to 2660s quickly and have another Dow. I'm expecting another Dow 500 plus day here shortly in the next week or two, definitely. But we could also just move right back to the bottom of this range and drift in this down channel too that we have here. So if you have questions throughout the week, you can always email me, tim@eminimind.com. I know I'll be chatting with some of you in the apprenticeship program later this week on our weekly coaching calls. Those are always fun, and it's always fun to see the progression that folks are making. But like I said, email is always open if you do have questions. Hope everyone has a great week, and stay patient. The discipline from the patience and from creating that structure and routine always pays off in the end. So have a great week, everyone. We'll talk to you next week.